Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about this week's mortgage rates, and there's some big decreases even. We've got rates going down on a lot of products in this video. So if you've got a mortgage for an HMO or a buy-to-let in a personal name, a buy-to-let in a company name, a residential purchase that you want to do, or a remortgage that you want to do, we've got some really, really good news. We've got some new lenders moving into different categories. We've got some old lenders coming back and lots besides. Now, the reason why rates have dropped a bit at the moment is because the swap rate has dropped. That's where banks borrow their money, and that's the rate that they get when they're offered to borrow money. Now, what's also happened, which is pretty good, is inflation has had a big jump down this month. It's still way above the 2% target, but it's looking like we're going to get to that 2% target, hopefully close to being there by next month. Now, there's inflationary pressure on the back end of the year. We still think inflation could go back up. And so right now, some of these rates could be temporarily lower. We had this in December and January. I don't think rates are going to massively shift down. I don't think you're going to see like a 1% knocked off a rate. You might have a quarter or 0.5% if things play out this year. But this is a positive movement, and that's what we want to see, is stuff moving in the right direction. So let's jump into this and see how we're doing this month so far. But before we do, as always, if you haven't done already, do subscribe to the channel down there somewhere. Subscribe to the channel, hit the bell notification. We had more than 100 people subscribe yesterday, which was great. And while you're here, smash the like button. That really helps us with the YouTube algorithm. And maybe share this video. You can press the share button. It can put it into your WhatsApp. I'm sure you know someone that's looking to change mortgages at the moment or a bit concerned about what's going on. So let's share the message with these weekly videos. So let's look at HMO mortgages first. And HMO, if you don't know, stands for House of Multiple Occupancy. Normally you'd buy these in a company, and these are a little bit more expensive because there's a little bit more risk for the lender, and also they know you make more profit. It's a highly profitable strategy. So the Mortgage Works have got one of the best deals on the market at the moment. They've got a 5-year HMO deal at 5.34%. 5.34%, same as last week. That hasn't changed. The fees on this are 3%, and the loan to value is 75%. Pretty much the same. Now, on a 2-year deal, they've dropped the rates this week, which is good. So on a 2-year deal, they were around 5.25% last week. They've gone to 4.99%. So a pretty significant drop. Fees are still 3%. You don't have to pay these fees. These get added to the loan, which is the way I prefer to do it myself. And the loan to value here is 75%. So not bad from the Mortgage Works. Now, Mortgage Works, again, this is for limited company. So if you buy buy-to-let now, what I recommend that you do is you buy it in a company name. I think that's really, really important. That's more tax efficient. And because of that, similar to the HMOs, they charge you a little bit more on the rates than you might get in a personal name here. So on a 5-year deal, it's the same, 5.34, 3% fees, loan to value 75%. 2-year, this has dropped again since last week, which is really good to see. And so we've got a new rate of 4.99%. Very, very good for a limited company deal. Now, the fees, some of you are going to say these are really high. They are. Limited company fees are often higher, but you don't physically pay this. As I said, this gets added to the loan. If you took a 5-year deal, your house should have gone up more than 3% in that time. So you don't always feel the pain of that. And what it does is it means the affordability will pass. Rather than them giving you a low fee and putting the rate up to 6-7%, this helps you pass affordability. Buy-to-let in a personal name. Now, this is the winner, I think, this week. We've seen some great drops here. Mortgage Works, I did a video. I said they dropped rates this week. They're always one of the cheapest lenders. I think they're part of Nationwide. I always forget. It's Halifax or Nationwide. I'm sure one of you will comment, let me know. But the mortgage works have dropped these rates significantly this week. So this is a buy-to-let in a personal name. Now this works if you're only intending to get 1 or 2 buy-to-lets, right? This could be the way that you do it. Or maybe historically, you've already got buy-to-let. So I've been investing since 1999. And for the first 15 odd years, the way you did it was in your personal name. So that's changed. So what we're looking at here is the 5-year rate has dropped to 4.14%. That's a big drop. It was closer to 5% last week. Fees are still 3%. Loan to value is 75% here as well. Now, the 2-year deal, Mortgage Works seem to be dropping all of their 2-year deals at the moment, and it's 3.79. Remember I made a video the other day and I said some mortgage rates are going to go sub 4%. This is already happening. There's other lenders doing this as well. And so this is a sub 4% mortgage. It means the monthly payments are going to be really affordable. So you're going to make good cash flow if you're a buy-to-let investor, which is important in this market. Yes, the fees are higher, but that seems to be just the market at the moment. So the 3.79 is a decent rate, and I think it's probably the best in the market that I've seen. So this is buy-to-let in a personal name. Next, residential mortgages. We've got some more cuts again this week. Good positive cuts all round so far. Barclays, they are dropping the 5-year rate to 4.37%. That's a decrease of around about 0.25%. Now, this is also good because we're getting close to that sub 4% again. This is what we want it to happen. In December and January, we had a mortgage price war. It's getting a little bit more like that again, which is good. So 5-year rate is 4.37%. Fees are 995 fixed. Loan to value 75%. 2-year deal is 4.59. This is with NatWest, not with Barclays. Still, it's a good deal. NatWest have been in the news this week for dropping a number of rates, which has been really positive. 899 on the fees, and they'll lend you 75%. So this is more for people that have got a big deposit, or maybe you're doing a remortgage and you've already got some equity in that property. So really good. What do you think of these? Do comment as we go through. That helps me with the YouTube algorithm. Remember to share this video. I'm sure you know someone that's looking for a mortgage. This will help them. Now let's look at the residential mortgage, last one. And so this is a residential mortgage with a small deposit. Maybe it's a new purchase, or maybe you don't have much equity in that property already. And so HSBC have decreased the 5-year rate to 4.65%. That's not bad. Remember, a year ago, we would have been looking at 6.5%, 7% for this kind of mortgage. So 4.65 is good. It could be better, but it is good. It's good from where we were, right? It is definitely moving in the right direction. The fees are 999. The loan to value is 90%. And the Cumberland, I mentioned these guys last week. I've never heard of them before, but I'm just doing a mortgage with a company. Doing a mortgage this week with a company called Quantum. I've never even heard of them. So it's not a problem. If someone will lend me money, I will borrow from them. 2-year deal with the Cumberland is 5.07% with £999 fees on a 90% loan to value. So all in all, this is a good week. We've made some videos with swap rates dropping and rates are moving in the right direction. Look, if inflation drops again next month to close to 2% as we're expecting, you might see some more rate drops. I've said personally, I think the best rate that you will get this year is 3.5%. That's what I think. That's what I'm predicting will be the best rate. But if you look at it, we've already got one here that's 3.79. That's a buy-to-let, but it's not far away from that, is it? And so things definitely are improving on the mortgage front. But if you need a mortgage, you need to get your rate fixed. Don't wait for rates to come down. Even if they do come down, they're not going to come down loads. Get a rate fixed and then look at improving that at a later date. Don't sit on the variable rate. The variable rates are high, 8-9%, which isn't good for anyone. Anyway, that's it for this week. Let me know in the comments what you think. Have you found any lenders that I've missed out? I'd love to know. Do smash the like button, guys. That really helps me with YouTube. It gets me more views. It grows the channel. I appreciate everyone that does that. Go and check out some more content, including this video right here.